Now in Bed Bath & Beyond yesterday, check this out. We got past this node at 1290. See, it's not as big as the point of control. It's not as big as this guy either, but it's still a significant area. So the way you would trade this is if we get above this, you want to chase this to the upside. So we captured this area and we hit the top of this node. Now look exactly, and this was here before. This node was not created yesterday. This was here yesterday. Look exactly where we hit. We hit the top of that node. So if you see price hitting the top of that node, that is when you would logically want to get into a short-term short position and trade the close. We've been doing this a lot, getting into some swing trading, playing off of these different nodes. Like, okay, we hit a resistance here. It's logical that in the next few days, we're going to roll over. So looking at something like Bed Bath & Beyond, you want to take advantage of these nodes. And it would be logical yesterday, 1711, that's where you want to get into a short-term short position, a short-term short. And look, lo and behold, we are down with that today. All right, we're going to bring on Mark Sebastian. Mark!
Hey.
Bad boy of options. We talked about Bed Bath & Beyond. We also talked NVIDIA. Is the options chain telling us any more to the story?
Yeah, so long term, we all know Bed Bath & Beyond is going lower, right? That's something that we should acknowledge. Even if short term, it's moving around wildly. Now, here's the problem. You want to, and this is another thing about volatility, right? You want to buy puts maybe in something like Bed Bath & Beyond, but the problem is that the implied volatility is now 280. So if Bed Bath & Beyond drops, let's say even $5, and you buy a put, implied volatility could come in so much that your put still loses. Prior to this move, implied volatility in Bed Bath & Beyond was about 130, still really high. It's now 280. So it's got 150 vol points to drop. So you go out and buy something long term, you're going to get smoked. So what does that mean? How do you trade this? You can spread. That's about the only thing that you can do in Bed Bath & Beyond to take advantage of long-term trends. So a trade that makes sense to me, and this is something I talked about in Profit Revolution, is like a broken wing butterfly, a put debit spread, something along those lines in January. So for instance, the January $10 puts are $3.25. $3.25. You go to buy a put there, and yeah, you know, you're getting some short delta, but the amount of Vega that you are buying, Vega is that exposure to implied volatility, is astronomically high. The Vega is about $2.55. So think about this. It's a 16 delta, and we drop $5. All right. So that, and let's say the average delta on that $5 move is 20. So 20 times that $5 move, those puts would theoretically make well over $1. But the problem is, if implied volatility comes in by 100 points at $2.55, that option is actually going to lose $2.50 in Vega. So you made $1 on the move, but you lost $2.50 buying that option. So that $3.30 option that you were right on is worth about $1.80. And that is what can happen to you if you don't know what you're doing with a name like Bed Bath & Beyond. So the answer is you have to spread. You buy something like the 15 puts and you sell a bunch of the 10 puts, or you buy the 10 puts and you sell some 7 puts. The only way to make money on a name like Bed Bath & Beyond if you want to set up a long-term short.